Hello students, welcome back to Global Online Kannada. So if you are preparing for the upcoming KSET examination or UGC NET December attempt examination from the management or commerce background paper 2, this session is very important for you because in this session we are going to discuss very important MCQs on the topic working capital management. Okay, previously we have already done this session in which we have discussed some of the important MCQs on the WCM. In this session, we are going to discuss some of the different questions that can be asked in the examination directly or indirectly. So I suggest each and every aspirant, please watch this video till the end because this session is going to benefit you in the examination to maximize your score. Okay. We have come up with the paper 2 complete course for management and commerce students for upcoming KSET examination and also for UGC NET December attempt. In this complete course, you will be guided with the experts to qualify for this examination with the very good marks and confident. Right? In this course, you will be getting all the complete video lectures which will cover your whole syllabus of paper 2. Also, you will be getting the complete syllabus notes, mock tests, PYQs also with the explanation. Doubt clearing sessions will be provided to you. Marathon sessions will be there, so you will have an idea about the MCQs and questions that are asking in the examination, right? So if you want to crack this examination, join today. Just go and WhatsApp on this number. Just do WhatsApp message or WhatsApp call and you can join the course. Okay, do not wait and do not late. Just start your preparation from today. First question on your screen. Which industry generally requires highest working capital? Okay, so one of the industry in the options is there, and this industry generally requires more working capital. Okay, which industry is this? Steel industry, construction industry, retail trading, or IT services? That is your retail trading. Okay, see, retail requires heavy investment. Why? Because in inventory, receivables, continuous cash transactions, this is very important things for the retail industry to run the business, to smoothly function the business, right? Steel constructions are capital intensive but not as liquidity heavy, right? So they need only the long term assets or long term capital, correct? But the retail industries that needs the inventory, receivables, continuous cash transactions. For that reason, they need more working capital. IT services need relatively less inventory. Thus, retail trade has maximum working capital demand, right? Next, net working capital is defined as total assets minus total liability, current assets minus current liabilities, fixed assets minus long-term liabilities, or cash plus receivables. So net working capital, that means your current assets minus current liabilities. Okay, when you minimize the liabilities from the current asset, total current assets, you will get the net working capital. Net working capital is the difference between current assets and current liabilities. Just we have seen the formula. When we minimize the total liability from the total assets, we will get the net working capital, right? So when the positive net working capital is there, that indicates the liquidity buffer, while negative net working capital shows the potential financial stress. Okay, so it should be always a positive one, right? That needs company. The company needs that working capital, right? Net working capital to run the business very smoothly. It is a key measure of short-term financial health, right? If the positive working capital is there, that means the company's financial health is very good. Okay. In aggressive working capital financing policy, A, all working capital is financed by the long-term funds. B, only permanent working capital is financed by long-term, rest by short-term. Or C, both permanent and temporary working capital financed by long-term funds. And D, entire working capital financed by the equity. Okay, so these options are expressing about the aggressive working capital finance policy. So that option B is correctly expressing the aggressive working capital finance policy, where the permanent working capital is financed by long term and rest is by the short term. Aggressive policy relies heavily on short-term borrowings to finance temporary working capital, right? It is high risk, high return because short-term funds are cheaper but increase financing risk. Okay. The cash conversion cycle, CCC measures: A, time taken for fixed asset to be depreciated. B, days inventory outstanding plus days receivables minus days payable. C, average collection period into inventory turnover. Or D, credit policy efficiency. So the right answer of this question is option B. The cash conversion cycle is equal to days inventory outstanding plus days receivable minus days payable. Okay. CCC shows the time taken to convert investment in the inventory and receivable into the cash. So when we convert those investment, right, into the inventory and receivables into the cash, okay, after accounting for payables, that means minusing the accounting payables, whatever the remaining is, that is your CCC. So lower the CCC, higher the efficiency. Understanding? When the CCC is lower, the efficiency is higher, right? It integrates inventory, receivables and payables management. Okay, getting it? So lower the CCC, that means the time taken to convert those investments, investment is into inventory and receivables into the cash. That time is less, that means efficiency is higher. Okay. Which current asset is most liquid? Inventory, accounting receivables, prepaid expenses, or cash? It is what? It is cash. Okay. Current asset which is more liquid. Liquid, that means which is easily convertible into the cash. Okay. So cash is obviously it is already liquid. So it is more flexible to transact, right? So that is why it is called the most liquid. Cash is the most liquid asset as it can immediately settle the obligations. Getting it? Whatever the obligations, short-term loans and all you have, payables you have, that can be easily payable. That is why it is called more liquid. So receivables need collection, right? Inventory needs sale. And prepaid expenses cannot be converted back. Correct. So liquidity ranking, when we show that into this formula, like cash is greater than receivables, receivable is greater than inventory, and inventory is greater than prepaids. That means this is the cycle actually, right? Cash, receivables, inventory, prepaids. Okay. So when cash is more liquid, these things can be done very easily. Which working capital policy maximizes the risk? Aggressive policy, conservative, matching, or hybrid? Okay, so that aggressive policy, okay, aggressive working capital policy maximizes the risk, as we have seen the question on that. Aggressive policy depends heavily on the short term, right? Short term borrowings for even part of the permanent working capital, right? While it lowers the financing cost, it maximizes the liquidity risk due to the refinancing and interest rate fluctuations, right? Which of the following item is not part of working capital? Trade receivables, inventory, plant and machinery, or cash and bank balance? What is it? It is plant and machinery. Okay. It is not the working capital. It is not comes under the current asset or current liability. Correct. So that is why it is not considered as a working capital. Trade receivables, inventory, cash and bank balance, these are current assets and current liabilities, right? There is no liability, but these are current assets. Okay. So working capital, that means current asset and current liability. There is no fixed asset or fixed liabilities, right? So plant and machinery is fixed asset, so it is not considered as a working capital. It's so easy. Zero working capital means current asset is equal to zero, current liability is zero, current assets is equal to current liabilities, or current assets is greater than the current liability. It is what? Current assets and current liabilities are similar. That means zero working capital. Okay, zero working capital, that means what? Your current assets and your current liabilities both are similar. Okay, you have no excessive current assets, okay, compared to the liabilities. So that means you have no working capital. Okay. Which of the following reduces working capital requirements? A, extending credit period to customers. B, maintaining high level of inventory. C, increasing creditors payment period. Or D, offering cash discount to the debtors. See, these MCQs that we are discussing here are really very important, because when you practice those MCQs more and more, right, it will create the confidence into the you. So you will able to answer the questions, because through the MCQs you are not just practicing the MCQs, you are also getting some new concepts in that chapters, right? So it will be very beneficial. So practice more MCQs. So option C is the correct answer. When suppliers extend credit, the firm can delay cash outflow, right? And reducing net working capital needs. On other hand, extending credit to the customers or holding excess inventory increases working capital requirements, right? Liquidity versus profitability. Okay, liquidity versus profitability trade-off in working capital management. A implies more liquidity always increase profitability. B, less liquidity reduce risk. C, high liquidity reduce profitability and low liquidity increases risk. Or D, liquidity and profitability are unrelated. What is it? Option C. High liquidity reduces profitability and low liquidity increases risk. Okay, understood? So maintaining high liquidity, cash or idle assets reduces returns as funds are not invested productively, right? And too low liquidity may cause inability to meet the obligations, increasing insolvency risk, right? So efficient working capital management seeks an optimal balance. So it should be balanced. It should not be more, it should not be lower. It should be balanced. Okay, then only your working capital will be accurately used. All right, so this is all about today's session, everyone. Unfortunately, we are not able to take the live session in the morning, but doesn't matter. We should not stop. We need to practice more and more. So I have made the recording of it. So practice more MCQs, and anything, if you have any doubt, please comment in the comment box. Okay. Chalo. Have a great day. See you in the next session.